Okay, let's dive right in. The very idea of money, how we use it, how we send it, is being completely rewritten as we speak. And I'm not talking about small tweaks here. We are in the middle of a fundamental redesign of how value moves around the world, and it is happening way faster than most people realize.
I mean, just think about it for a second. We can video call someone on the other side of the planet instantly. We can stream a movie in 4K from a server thousands of miles away. So why on earth does sending a simple payment to another country still feel like it's stuck in the 90s? It can take days, the fees are often ridiculous. It just doesn't make sense, right? It's a huge disconnect.
And this image, well, it just says it all. You look at our physical world, and it's built on these sleek, modern, interconnected highways. Everything's designed for speed and efficiency. But the infrastructure for our money, the financial plumbing, a lot of it is decades old. It's clunky, it's fragmented, and honestly, it was built for a totally different era.
But all of that is about to change. A massive, high-stakes race is now on to build the new financial rails for the 21st century. And this isn't just about making payments a little bit faster. Oh no, this is about who gets to control the flow of money and data for decades to come.
And in this race, you've basically got two major contenders, each with a completely different vision for our financial future. On one side, you have governments and their central banks, and on the other side, you've got the private sector, everyone from agile fintech startups to the biggest tech giants on the planet.
So let's start with the public sector's answer to this whole problem. They're developing something called central bank digital currencies, or you'll hear them called CBDCs. The easiest way to think about this is like a digital version of a country's cash, like a digital dollar or a digital euro, issued and backed directly by the central bank itself.
And you have to understand, this isn't some small, niche experiment. Not at all. We are talking about more than 130 countries and jurisdictions around the world. That represents the overwhelming majority of the global economy, and they are all actively looking into this.
Now, this map really drives that point home. It visualizes that global race perfectly. You can see that CBDC projects are popping up everywhere, from North and South America to Europe, Africa, and Asia. This is a truly global phenomenon, a strategic priority for pretty much everyone.
So what's the story this map is telling us? Well, first off, Asia is clearly leading the pack, with huge pilot programs in places like China and India. Second, everyone's doing it for slightly different reasons. Emerging markets are hoping this can help with financial inclusion, getting banking services to more people. Meanwhile, advanced economies are more worried about maintaining control over their own money supply. But here's the catch. Because everyone is moving at a different speed, there's a real danger we end up with a fragmented system, where all these new digital currencies can't actually talk to each other.
Okay, so that's the public side. But while governments are carefully planning and piloting, the private sector is just moving at lightning speed. Their answer comes in two main flavors: stablecoins and the massive payment platforms from big tech.
Let's just try to absorb the scale here for a minute. Stablecoins, these are privately issued digital tokens that are pegged to a stable asset like the US dollar. They have just exploded. There's over $227 billion worth of them floating around the digital economy as we speak.
And that capital is not just sitting there. The truly mind-blowing number is this one. Stablecoins are now settling a staggering $27 trillion in transactions every year. To put that into perspective for you, that volume has already blown past what major credit card networks like Visa and MasterCard process. This isn't the future. This is happening right now.
And this quote just nails it. For a huge number of people and businesses, especially in the digital native economy or in emerging markets, stablecoins aren't some weird niche thing. They're the main way they move money. They're fast, they're global, and they're cheap.
And of course, it's not just about crypto-native stablecoins. You have the big tech giants. I mean, just look at China. Platforms like Alipay and WeChat Pay have totally transformed daily life by weaving payments into everything they do. Social media, shopping, you name it. And they're processing over $13 trillion a year. So, all of this, the public race, the private explosion, it brings us to the real heart of the matter. This is no longer just a tech story about faster payments. The entire world of finance has now become a new and intense geopolitical battlefield. To really get why, you have to think about financial infrastructure as the circulatory system of the whole global economy. It's the hidden set of rails that moves all the money and data around. For a long time, everyone just thought of it as neutral plumbing, but not anymore. Now, whoever controls these new digital rails has an incredible amount of power.
And you can see that power struggle playing out right here. For decades, the world ran on one main system, the US-led SWIFT network.
It was the undisputed standard. But now? Now we're seeing alternatives pop up. China is pushing its SIP system to globalize its currency. Russia has built its own version called SPFS. We're watching parallel financial tracks being built in real time.
This quote really just says it all, doesn't it? The very plumbing that underpins global commerce is now a tool of national strategy. If you control the plumbing, you have influence over data flows, sanctions, and economic policy. It's no longer neutral territory.
So where does this all leave us? What does the future of your wallet, and really the future of the global financial system, actually look like? Well, depending on who wins this race, we can imagine two very, very different outcomes. On the one hand, you could have a future that's led by these central bank digital currencies. In this world, governments and central banks stay firmly in control. The main goals are stability, financial inclusion, and protecting national monetary sovereignty. But on the other hand, you could have a world where private innovation just outpaces everyone. Here, stablecoins and big tech platforms become the new default. Innovation would be incredibly fast and focused on what users want, but it would come with some big risks, like new monopolies and maybe even financial instability outside of direct government oversight.
And that leaves us with the ultimate multi-trillion-dollar question. As these powerful public and private forces race to build the new financial system, the very architecture of our world is being redrawn. So the big question for all of us is, who gets to decide what the future of money looks like? The governments? The tech giants? Or maybe, just maybe, the people who actually use it? The race is on, and the outcome is anything but certain.